Hey guys, what's going on? I hope you're having a great week so far. Let's get into some stock talk. Cleanspark is subject to various risks that may materially harm their business, prospects, financial condition, and results of operations. An investment in their common stock is speculative and involves a high degree of risk. One of the biggest keys to successful investing is understanding the risks involved. A firm understanding of risk associated with an investment can serve as a beacon of reason as you navigate through a volatile stock market. So let's talk about 10 to 12 major risk factors that you need to be aware of before investing in Cleanspark. Today, we will primarily focus on following risk factors, being supply chain disruptions, limited operating history, emerging and evolving industries, strategic transactions, government incentive programs, and regulations. Supply chain and shipping distributions have resulted in shipping delays, a significant increase in shipping costs, and could increase product costs and result in lost sales, which may have a material adverse effect on their business, operating results, and financial condition. Supply chain disruptions resulting from factors such as the COVID-19 pandemic, labor supply, and shipping container shortages have impacted and may continue to impact Cleanspark and their third-party manufacturers and suppliers. These disruptions have resulted in longer lead times and increased product costs and shipping expenses, including with respect to the delivery of miners that we have purchased. Cleanspark has a limited operating history and a history of operating losses and negative cash flow, and they may never achieve consistent profitability. Their limited operating history, including our recent entry into the digital currency mining business, makes it difficult to evaluate the business and predict our future results of operations. Although they have achieved profitable quarters in the past, to date, they have not maintained consistent profitability from period to period, and no assurances can be made that they will achieve consistent profitability in the near future, if ever. From the company's inception through September 30th, 2021, they sustained over $135 billion in cumulative net losses. And they had a net loss for the fiscal year that ended September 30th, 2021 for $21 billion, roughly. Their future success is difficult to predict because they operate in emerging and evolving industries that are subject to volatile and unpredictable cycles. The renewable energy, Bitcoin mining, microgrid, and related industries are emerging and evolving, which may lead to period variability in our operating results and may make it difficult to evaluate their future prospects. Cleanspark's energy products and services are based on unique technology that they believe offers significant advantage to their customers. But the markets they serve are in relatively early stage of development, and it's uncertain how rapidly they will develop. It is also uncertain whether their energy products will achieve high levels of demand and acceptance as these margins grow. They rely heavily on their management team, whose continued service and performance is critical to their future success. Any failure by management to properly manage growth, including hiring and retiring competent and skilled management and other personnel, could have a material adverse effect on Cleanspark's business, operating results, and financial condition. Cleanspark currently has 4 executive officers. They are responsible for their management functions and are responsible for strategic development, financing, and other critical functions. They have engaged in, and in the future may engage in, strategic acquisitions and other arrangements that could disrupt their business, cause dilution to their stockholders, reduce financial resources, and harm operating results. Cleanspark has previously engaged in strategic transactions, including acquisitions of companies, product lines, technologies, and personnel, such as their recent acquisitions of ATL in December of 2020 and SolarWatt in February 2021. And as part of their growth strategy in the future, they may seek additional opportunities to expand their product offerings or the markets. Cleanspark's ability to grow through future acquisitions will depend on availability of and their ability to identify suitable acquisition and investment opportunities at an acceptable cost. Cleanspark's energy business is substantially dependent on utility rate structures and government incentive programs that encourage the use of alternate energy sources. The reduction of elimination of government subsidies and economic incentives for energy-related technologies would harm their business. Cleanspark believes that near-term growth of energy-related technologies, including power conversion and solar energy technology, relies partly on the availability and size of government and economic incentives and grants. These incentive programs could be challenged by utility companies or for other reasons found to be unconstitutional. While they believe that Bitcoin is unlikely to be considered an investment contract and thus a security under the investment contract definition, they cannot provide any assurances that digital assets that they mine or otherwise acquire or hold for their own account, including Bitcoin, will never be classified as securities under U.S. law. If regulations or interpretations change and regulation of Bitcoin under the U.S. security laws, Cleanspark may be classified as an investment company. Current and future legislation and the SEC's rulemaking and other regulatory developments, including interpretations released by regulatory authority, may impact the manner in which Bitcoin is treated for classification and clearing purposes. The SEC's July 25, 2017 report expressed its view that digital assets may be securities depending on the facts and circumstances. It may be illegal now or in the future to mine, acquire, own, hold, sell, or use Bitcoin or other cryptocurrencies, participate in blockchains, or utilize similar cryptocurrency assets in one or more countries, the ruling of which could adversely affect them. Although currently cryptocurrencies generally are not regulated or are lightly regulated in most countries, several countries such as China, India, and Russia may continue taking regulatory actions in the future that could severely restrict the right to mine, acquire, own, hold, sell, or use these cryptocurrency assets, or to exchange for local currency. For example, in China and Russia, it is illegal to accept payment in Bitcoin and other cryptocurrencies for consumer transaction, and banking institutions are banned from accepting deposits of cryptocurrencies. In addition, in March 2021, the government authorities for the Chinese province of Inner Mongolia banned Bitcoin mining in the province due to the industry's intense electrical power demands and its negative environmental impacts. Thank you, and be sure to tune in for our next installment when we tackle the geopolitical and economic events that help shape the demand for Bitcoin.